Good morning, this is Federico Bentley from Ayondo Markets giving you this morning's market update. Traders and economists will be busily preparing for the so-called Super Thursday tomorrow, where the Bank of England will for the first time release a string of reports alongside its monthly monetary policy decision. Additionally, at least two hawks are expected to dissent and vote in favour of an interest rate hike for the first time this year. The so-called Super Thursday meeting will see the central bank publish its monthly decision on interest rates, the minutes from the debate, and the quarterly inflation report at the same time. The minutes, which provide a breakdown of how the nine-strong monetary policy committee voted along with a summary of the debate, are usually published 2 weeks after the rate decision. The bank's policymakers are expected to keep rates on hold at 0.5%. However, analysts expected a split for the first time this year, with two or three, including Martin Wheel and Ian McCafferty, predicted to vote for a rate rise. Governor Mark Carney has made some hawkish noises of late. Looking at European markets, the UK 100 rolling is trading 20 points above from its open. The France 40 rolling is 53 points higher, and as for the Germany 30 rolling is 122 points higher. Top UK shares ended yesterday on a flat note, with the market held back by a mixed bag of corporate earnings and a $30 billion bid from drug maker Shire for rival Baxalta. Now skipping across the pond, Wall Street was rather subdued as investors worried about a rise in interest rates, while Apple shares hit their lowest in over 6 months. Wall Street rolling fell almost 48 points, or 0.27%, to 17,550.89. The US 500 lost nearly 5 points, or 0.22%. And as for the US tech rolling, dropped nearly 10 points, or 0.19%, to 5,105.55. Asia markets were mixed overnight, as they too felt pressure from the rising risk of a rate hike in the US. Now looking at some corporate news. London Stock Exchange said adjusted operating profit rose 27% to £366.1 million in the 6 months ended 30th of June. Legal & General reported profit after tax rose 8% to £547 million in the first half of this year. London-listed pharma giant Shire yesterday made a $30 billion hostile approach to the US rival Baxalta in a deal set to double the size of the firm. HSBC has appointed Antonio Simoes as Chief Executive at HSBC Bank plc, its UK business, and he replaces Alan Keir, who has worked at the bank for nearly 34 years and intends to retire once the change comes into effect on 1st September. Now focusing on commodities, a bounce in crude oil and other commodity prices on Tuesday halted a plunge in currencies of countries linked to natural resource exports. The respite will be short-lived, according to Oppenheimer Funds Incorporation. The Canadian, Australian and New Zealand dollars are off to the worst start of the year since the financial crisis. The nations are grappling with a 29% drop in raw material prices amid swelling supplies and slowing demand in China that may wipe out as much as 14% of the Canadian dollar's value in the next 3 years. Next up, they'll have to contend with the Federal Reserve's plan to raise interest rates this year, which is forecast to boost the US dollar. It's an oil crash few said were coming, and few have spared it as it's raised $1.3 trillion, the equivalent of Mexico's annual GDP, in a little more than a year. Take billionaire Carl Icahn. When crude was at its peak in June 2014, the activist investor's stake in Chesapeake Energy Corporation was worth almost $2 billion. Today, oil has lost more than half its value. Chesapeake is the worst performer in the S&P 500's index, and Icahn has a paper loss of $1.3 trillion. The S&P 500, by contrast, is up 6.9% in that time. Now for some key economic data. We've had just the PMI composite for the UK at 9:30, along with the PMI services. And at 10 a.m. we have retail sales for the European Union and crude oil inventories this afternoon for the US at 3:30 p.m. That's all for today's news, so thank you very much for listening and all the best on your day's trading.